Ladies and gentlemen, K Kim here with the Traders Club. Welcome to the market update. Thank you for your patience. I had some things to take care of over the weekend, and I was going to do this yesterday, but my phone broke. It wouldn't work, and so I had to kind of go phone shopping yesterday. And when I came back, I felt kind of tired. I had my dad coming over for dinner, and so you know what, let's do that tomorrow. So tomorrow is here. Tomorrow is Sunday. Today is Sunday, midday. As usual, let's continue with our weekly analysis. Let's start with the Spider, Diamond, Qs, Russell, Semi, and the banks here. Hope you guys had a good week trading this week. Some volatility, some up and down moves here, and we are at this level around 290s. Let's kind of follow up with what we've been talking about last Friday. Last Friday was what? Last Friday was 2nd. Not like just past Friday, but 2 weeks ago, Friday, 2nd. So that's, that's this on that day. That's when I did the video. Oh, I have a little announcement there next week. I'm traveling next weekend. So I will be publishing this video, the market update video for you guys, on Thursday night instead of Friday. I'll be on Thursday night. So since then, last week I gave you these three levels: 289, 287, and 284. It came down to the last level, and we filled this gap here, as you can see, 285 to 37 level, and that's the level that I tweeted out just when was that? This was Monday, right? On Monday, and we kind of went sideways a little bit. We retest the low on Wednesday, as you can see there on the last level that I given you, 284. And then we had a bullish day. We saw a gap up, and then with a full-on bullish day on Thursday. Friday, we gapped down a little bit. We saw this thing coming down, but was not able to fill the gap that was open on Thursday. We saw some dip buyers coming in. We're right back here. Now we're just right on that 250 MA. So let's do a little bit of maintenance here. What I'm gonna do, okay, so we got the down gap is gone. So let's do that. Let's get rid of that. Get rid of that. Let's get rid of this one because that gap was filled, right? So let's get rid of that. What I wanna do, we have island reversal. You know, it's not a textbook, and I think for this island reversal to be strong, it should have been a bigger gap up. So because this was a big gap down, this gap is pretty puny compared to this gap down. Nonetheless, we do have island reversal characteristics. So we'll put that as a green. I want to put a little box here, let us know that this is kind of an island reversal, and I want to do this. So the worst case, I'm going to give you the worst case scenario. Worst case scenario, as I tweeted out before this week, is 277, and 277 is a level where we got big gap up. This was back in June, early June, when we saw that big gap. That's a pretty nice gap, and that in itself also kind of had, no, actually it didn't have island reversal because the gap was up here. But we talked about it back in early June that we filled the gap. You see that there was a down gap. We filled that gap, but it never even retraced. It never even pulled back. We never even paused. We gapped up again next, and that told us, we talked about it on the market up video, that told us that there's a lot of strength in this move, and that got us all the way to 302 or something like that. Pull back, we got the 3-day consolidation there, kind of looks like a tweezer bottom reversal candle. We saw gap up, we saw follow through, and now we can see we're holding this level. We're now back above the 100 SMA there, but below the 50 and below the 20. Right? So we're kind of sandwiched between, and we just also got this down gap, which I tweeted out just a couple days ago that's going to be a key going forward. So this gap needs to be filled. If the gap does not get filled, just the way it's been reacting just beneath it, we need to see the bulls need to fill that gap. So there's a couple of ways it's going to happen. It goes up here and fill that gap. And remember, when the gap gets filled, it's going to act as short-term resistance, instant resistance. So, and in that process, that 20 MA here, that's probably going to come and hit it. So we're probably going to come back down, maybe retest this or somewhere in that vicinity. Even though when the gap gets filled, it's going to act as resistance, it will be better for the bulls to fill that gap and pull back versus kind of fizzling back up, not filling this gap, and then pulling back. Then for sure we're going to come down and fill this gap, right? So it's better to fill it and then pull back and then possibly get back up. The best case scenario is we gap up above it and turn it into yet another island reversal, because we got a gap down, possibly gap up. Then we're going to get back up to retest 300 to 303 in a hurry. And that would be the best case scenario. The worst case scenario would be this thing coming down. Instead of filling this gap, we gapping down. It gaps down, turn this into an island top. Then at that point, for sure, we're going to retest the lows at 280s and come down to retest 277. So now I gave you these levels. So short-term levels, 289, 288. So this is what's going to happen. If this thing gaps down, makes an island top, we're coming down to 280, 277. If this thing gaps up, makes an island bottom, we're going back to 302. So we're right in that middle juncture. You know, I'm kind of leaning towards next week, maybe fizzling here a bit and then maybe grinding higher. But I'm biased because I'm long. I bought the lows. But I am prepared and I am open-minded for potentially this thing faking out, creating more shenanigan, and coming down to retest 280, 277, at which point I'll probably buy more if we do come down in that vicinity. But if it goes higher from this point on, it will be good for the bulls. The bear's gonna be in panic at that point, and then we're gonna come back up and retest the highs there. But we do have good cultivation at this point with these higher lows and higher highs, right? So it's been volatile. It goes up, pull back, goes up, and these were sharp pullbacks. To be honest with you, I'd rather have a sharp pullback versus grinding. Takes a month for the pullback to happen, and this one just took like a week to make it down. So that way, if we got over with it, you have opportunity to buy that dip, and then we can come right back up instead of just grinding. So, but people freak out when there's a fast down move, and people start to get emotional. So I think just the way it fell, I feel like it's more of a scare tactic before we go right back up. I think market is ready for 310, 320, but it needed to kind of give you that one last shakedown here. But again, at the same time though, I am bullish, but I am open-minded for 277 because market knows how to create fear. If market decided to create more fear, then 277 is possible. 288, 277 is possible. But as long as we hold this gap here though, if the gap remains open, there's a good chance we break above it to the upside. So I'll take a look, we'll keep an eye on it. I tweet throughout the day at 2K Kim. You can follow me on Twitter. And if I see any developments, I will tweet things out like I did last week at this level right here. Let's go to Diamond. Diamond here. So Diamond, actually, this Diamond, do you know that Diamond, we actually had this gigantic island top? Because look at this. That was a gap up, and this was a gap down. So we actually had textbook island top. We did have it. However, that was quickly erased. You see how fast bulls got up there, and fill that gap. So they're no longer island bottom, because I think if that island was open, and let's say, you know, Thursday, Friday, we got up here, failed to fill it, oh yeah, it's gonna come back down to 245. So looking at diamond, we have a little bit different story here. Like bulls made sure that island top was filled right away, so we can kill that selling pressure right away. So now that gap was filled. You see this gap. That island gap is filled. And you can see, you know, I threw that Fibonacci here last week. I gave you that level, and we held that last level. And unlike Spider, though, we did came and retest that 200 SMA. And I almost feel like we even feel this. Nope, that gap. There's a little gap, just a little tiny gap is still open. You see, just a little tiny gap here. So you can see it was closed there, open here, came down, didn't fill it, got back up. So we got a little tiny gap coinciding with the 200 SMA. This is the last level of fib. We brought it back up. It came back up to fill this gap, so there's no longer threat of that island top, and that was a big island. You know, that could have done some damage if bears were able to keep that open. Then it probably would have come down 250, 245. But now to fill that gap, because now the gap gets filled, what does it do? It acts as instant resistance. That's what we saw on Friday. But same kind of thought here on the diamond versus also, you know, same with what I said about Spider, right? Let's see how it deals with this vicinity here. We're finding some good support at, you know, 250-ish level. Qs, I gave you 2 level last week, 185, 181. We came down. Same thing kind of happened on Qs. This was a gap here, and that turned into an island top. You can see right there. But kind of bears kind of fumbled it. They were able to materialize with that island top gap down. You see that, you know, but they were not able to materialize with it. And bulls got up pretty quickly and filled it. And actually they gapped that up. You know, and now that's kind of an island bottom too, but it's not textbook. It should have been a bigger gap. If it was a bigger gap though, I think this would have just thrusted above it. So it was a kind of a smaller gap. So let's do a little maintenance here. Let's get rid of some of these. And then that gap still remains open. That down gap needs to be filled. There's a small gap here. I want to put a box. I think it'll be important. So I want to put that here, but I also want to put that here, 277, right? And I want to put that here. So we're just middle juncture. Deal with that, you know, fix that. We're going to 195 higher. Gapping up will be the best case scenario. Boom, right? Make it into an island bottom. We're not gonna fill that gap. We start pulling back, fill this gap, and then we start fizzling down. We're gonna come back down to 177. So right in the middle juncture, you know, and I think it'll be key how the market behaves this week by the next week, end of next week. I think that's gonna be the key of how the fate of this market going into medium term, intermediate term, next. Remainder of this week or this month, and then September, how it's going to behave September. So I think it's going to be key how the market is going to behave with these two gaps there. And again, you can see how we're kind of sandwiched. We got 20 and 50 decline, but we got the 100 SMA still rising there. Russell 2000's been pretty choppy here. Let's kind of organize it a little bit. Get rid of that, get rid of that, get rid of this, get rid of that. The gap still remains open. It's been very choppy, but I have to say, man, this price action that we're seeing on the Russell 2000 is rather bullish, looking at things more of an intermediate term. You know, these sideways move, holding above some of these levels especially, is actually the market is preparing, because we saw pretty big decline. As you can see, this goes to waterfall. And then it's holding up like this is actually usually a good consolidation before next leg run higher. And next leg run higher will be much, much faster than this run and much, much stronger. But a lot of shenanigan here, a lot of these down gaps, you know. It's a little bit messy here, but I think same kind of analysis and same thought goes into Russell 2000 as well. So let's kind of skip that for today. Let's go semiconductor. Semiconductor, you know, we do have higher lows, and that's a good sign. And we got higher highs, and it is preparing to develop primary term uptrend. I gave you guys last week, I gave you these two levels, 110, 107. That's coinciding with the last level of fib. That's where we found support here. We're back above it, and I will keep that level for now. One last one, XLF, let you guys go with this. XLF finally broke below the support, but you guys know this could be a trap. A lot of people are gonna be, you know, nowadays everybody has a, you know, charting software. They can get it for free. Everybody's looking at these levels. The gap still remains open, so they can have to draw these levels like that, or even, you know, maybe they can draw like that. So there's actually two support. Let's draw both of those. So we got that. So if you're looking at it from here, you know, you thought that was primary term uptrend support. You put your stop below it. So when this thing came down, it taken a lot of stops. But I think, I don't want to do actually. I want to look at it like that. So now we're holding this support. We're holding that support. And there's a gap, right? So this gap filled? There's this gap. Yeah, that gap got filled. Look at that. See, gap here. Oh. Actually, it wasn't filled all the way. Let's check it out. I wonder if it's going to show on my hourly chart. Sometimes it doesn't. Let's check it out. Let's check it out. Yeah, I see it. I see it. Let's check it out. So that's where a gap started. So what I'm going to do, I'm going to put a box. Gap was not filled all the way. This is actually a bullish signal. We talked about this before. When the gap, when the gap is open and bears come down to attempt to fill that gap, and then when the gap does not get filled all the way, that's actually a kind of a bullish signal. I could find an example, but I don't want to go into it right now. But gap actually still remains open, was not filled entirety of it. So that gap remains. So let's kind of put that little box there. And then there's actually a little gap that still remains. There's a little tiny gap that wasn't filled. So now we got, okay, so what I'm gonna do, you know what, let's just kind of see how the market behaves, how the banks behave in this visit. We got this big gap down still open. The best case scenario would be this thing gapping it up. If we do gap up, it's gonna go to 29 and 30. You know, we may retest it or something like that, but it's going to 29.30. But if it will be better for the bulls fill it, pull back, gather themselves again, and then get back up instead of it's fizzling here and then we not feel it all. Again, same logic. If this thing does not fill this gap entirety of it and then start pulling back, they're going to start coming down filling this gap. So actually there's a big gap here. That's a big gap from here, right? So what I'm going to do, I'm going to give you that level, worst case level, and then 29 is that high, so that level. So you're going to have to see how the market is going to behave this coming week, that gap area, and then we'll see how it all played out going into next week. Again, next Friday I'm traveling, so the market update video will be published on Thursday. You guys enjoy the rest of this beautiful Sunday, and I'll talk to you next week, and good luck trading next week.